What's up? How's everybody doing? Let me know if you guys can hear me, see me in the chat. Good morning. How's everybody doing this Friday holiday? Hope you guys had a nice Thanksgiving for those of you that celebrate here in the United States. What's up, Daniel? No, sorry, Damien. This text is so tiny on my screen, guys. Sorry. Tendra, Gusta Forex, Johnny, what's up, man? Welcome. Hope you guys had a good Thanksgiving. I'm still kind of recovering from the food coma. And then I'm running a marathon on Sunday, so. So today's stream is gonna be a little different. I personally am not trading today, right? I don't trade on these kind of weird half days in between like a holiday and the weekend. Volume volatility can be tricky, but I am gonna be doing a fun stream today. I'm gonna be doing kind of an overview masterclass of order flow trading. So if you don't have a lot of experience with order flow trading, or even if you do, you may get some nuggets out of this that should be good. Good, man. How are you guys? Welcome in from Puerto Rico. Welcome. Yeah, so it's gonna be a fun one today. I'm gonna kind of overview some different trading concepts and kind of deep dive into some stuff that I use for order flow trading. Definitely will be a good one, will be fun. I'm gonna kind of do an overview of different analysis and things that I use to come up with trade plans, to come up with trade setups. And then I'm also going to deep dive, we're going to get more and more technical as the stream goes on, and we're going to deep dive all the way down into an exact trade setup that I took this week. I made about $1,100 on in 2 minutes. So we're going to break down the exact confirmations that I saw. We're going to break down the whole game plan going into the trading day. And so hopefully by the end of this, you guys will have a huge amount of value in a very short amount of time to understand order flow trading. I think it's going to be really fun. Good. So welcome in, everybody. Huge shout out to our sponsors, TradeZella. I'm actually going to share the metrics from my trade today in TradeZella. So we'll look at that. We'll also look at the order flow stuff that I'm going to share. I have the replay data pulled up to show you guys the exact order flow data as I saw it from the trade that I took back on November 25th. So just 3 days ago. But before we get to that, we're going to do kind of a deep dive of kind of an overview of analysis and order flow trading as a whole. But thank you to TradeZella and Apex as well. You guys check out the discount codes in there. They are doing deals, and we're also going to have some giveaways today. So stay tuned for that. We are still going to have, I think, like 3 giveaways. So stand by for that. We'll do, the usual giveaways still. And then also it is Black Friday. Check out the discount codes for the best deals from some of our partner prop firms. Again, like I always say, there's a ton of work that goes on in the back end from the ChartFanatics team to make this stuff happen for you guys. And that's made possible by having great sponsors here. So without further ado, we are going to get into it. This is my replay data. We'll get more technical into this, but I'm going to start out with kind of an overview today. I think if you're tuned into this channel, you obviously probably have some degree of understanding of technical analysis, technical trading, supply and demand. I'm gonna give an overview of how I use that today. Just basic supply and demand, support and resistance, but also we're going to narrow down more and more into how I actually use order flow and volume to understand with a very high degree of precision what's going on in the auction. I will answer questions throughout, guys, so this is going to be a very interactive day. So ask questions, whatever you want. My time is yours here. So if you guys want to ask questions in the chat, please do so. If I don't get to your question, I try to get to as many as I can, but if I don't get to it for whatever reason, send me a DM on Instagram. I am very responsive there to help people out. As far as how people deal with, I think there was an outage today. Doesn't really affect me because, like I said, I'm not trading on a day like this, and it's not surprising to see something happen on a day like this, where it's kind of a weird half trading day in between a holiday and the weekend. Just weird stuff can happen, both in terms of price and volume, just can be very sporadic. The tape is often thin. You may have surge in orders that can come in that can easily move, sweep the tape and move the market. So it's a good way to rack up stop losses, in my opinion. So I don't trade on days like this, but I do observe it. We'll talk about it. And the big thing that we're going to do today is kind of go through this order flow trading class and break down very technical trade setup confirmations that you guys can hopefully gain value out of, even if you trade a price action strategy, whatever. If you start looking at things on volume profiles and order flow, it may add a high degree of precision to your trading. So that is my goal today, to give you guys pretty much just as much value as I can in about an hour or so here. So yeah, we'll get into it. Good morning. Good morning. Just making sure I didn't miss any questions already in the chat here. So I'm not gonna like shift my screens around and stuff. I'm just gonna take snips of things that I'm talking about so I can move it on my screen that I'm sharing here, which is my bookmap screen. And that way I can also do kind of some drawing stuff to share that with you guys, to kind of do some crude drawings to kind of visualize some of the stuff that I'm talking about here. But the first thing that I want to talk about is just supply and demand, right? Regardless of like which market you trade, whether it's a stock market, a housing market, a car market, people buy and sell assets in all different markets. At the end of the day, the market is an auction, right? So it's just fueled by buyers and sellers. Price can stay in a range, pricing can be imbalanced going up or down. But at the end of the day, the market is an auction, right? And so when I'm doing basic like technical analysis stuff on candle charts, it's very useful to quickly identify market structure just from the pure price action from the candle chart alone. But the candle charts don't tell the whole story, right? It only gives you a small piece of the story, just like where price transacted over time. And so when you start layering in more and more information, it starts to get you a real edge in terms of understanding the true market auction, that is the mechanics that are driving the price up and down. And when you layer that in, it gives you a much higher degree of precision and actually like real understanding. But in terms of supply and demand, there's really three things that I'm looking for in an auction. And this could be like, for example, I primarily trade the S&P, right? But this could be related to any market, whether you trade NQ, whether you trade, other different commodities, whatever. But in terms of supply and demand, there's basically three conditions that I'm looking for in the market when I'm doing technical analysis on charts. And we all kind of know like what this is, right? Condition one is the market is relatively balanced, right? So think of this as just a candle chart. I'm just going to kind of crudely draw this here for you guys. But the market could be in a balanced condition, right? So, on a candle chart, it could be range bound. We're going up and down with this, and this is just a balanced market, right? So buyers and sellers are roughly agreeing on price. So price is pretty much staying within that range where buyers and sellers are agreeing on price. Now, the other two things is when the market is imbalanced, right? When the market is imbalanced, we could be making bear flag conditions, right? Where we're downtrending, right? That would be an imbalanced market condition. I'm not going to type that all out, but just imbalanced, okay? Or the market could be imbalanced and moving up. We're going to get more and more technical. I'm starting out light and we're going to work our way into it, guys. So if it seems like a very, crude and basic thing and you already understand this, well, just, bear with me, right? Bear with me, right? So either the market, we could call this like fair value. Somebody put in the chat, right? We could air quotes fair value, right? The market is agreeing on price in a balance range, or, a new piece of information comes out or something, technical happens in the market and creates an imbalance, right? And so the market goes into a downtrend or an uptrend as it expands to the next area where the market, it's finding new value, right? So until we get to a new point, where buyers and sellers agree on price, then we will continue to make that imbalanced move, right? And so this occurs on all time frames. And one of the problems with, like a candle chart and looking at things like this that occur on a candle chart alone is because, like, depending on which time frame you're looking at, that can change. So you need to understand like which time frames that you're looking to trade. For me, and probably most people in here, I'm a short-term day trader, right? So for the, I do some other types of things, but for 90% of the time, I'm short-term intraday trading. So depending on which time frame you're looking at on a candle chart, without understanding volume, without understanding the order flow, it's easy to get tripped up and not understanding the conditions that are going on, right? So, on a higher time frame, we may be uptrending, and then we go into a period where the market is then, I'm just doing a random color here, is then balanced within a shorter period of time, right? And then, we either reverse and go back down, market makes a new balance, or, we rally out of there, we base, wanted to do green for that. Or we go into a period where, we then based and then rallied, right? And then when, again, we get that rally, base, drop, those different types of just simple price action structures that occur on a candle chart. Does that make sense so far? Have I lost anybody yet? Hopefully not. Let me know in the chat, guys. And so actually, I'm going to drop these screenshots as I talk throughout this in the ChartFanatics Discord. So if you guys are not already in the ChartFanatics Discord, it's free to join. It's a super excellent resource to connect with other good traders and my other professional traders, myself, and all the other people on the CF Live team. So I highly recommend joining in there. I'm just going to copy and drop these screenshots in the Matt Owen channel under the CF Live tab in the Discord. And so if you want to go back and rewatch this recording and check out the screenshots as we talked about it, I'll drop the screenshots in there for you. Awesome. Yeah. Who doesn't love excellent free resources? So talking a little bit about the mechanics of what's going on here, what I was talking about is a lot of people will trade really well for periods of time, right? Maybe they have a certain setup that's working when the market is in this uptrending condition, and then they're slow to identify and adapt when that condition changes, and we say go into a balance period. They blow up all the capital that they made and then some, and then then they're constantly fighting this game where every once in a while they're like a blind squirrel in the market. Every once in a while the blind squirrel finds a nut. You're in a condition where the setup that you're looking for is just working, and then it transitions and you blow all that up, and then it goes back into another condition, and then maybe for a period of time you find a setup that's working while the market's in that condition, so you make a little bit of money. But then what does the market do? It constantly adjusts and constantly changes. Maybe it goes back to balance, you get chopped up, you blow up all the money you made, then it reverses, and you're constantly playing this catch-up game because you may be slow to identify and adapt to the conditions that are going on, and slow to match the certain types of setups that you're looking to trade with what makes sense in the current auction and what makes sense in the current, whether it's trend or condition, you could call it, in the market, right? And so a lot of people will look at indicators and chart patterns and things like that, but the problem with those types of things is those are all just a mirror reflection after the fact of what the market auction is doing in real time. So they're always going to be lagging indicators. There are no leading indicators like that, right? And at random, maybe sometimes something will be a leading indicator, or it's not really a leading indicator, right? It was just a probabilities thing. But people are slow to adapt because oftentimes they rely on indicators and chart patterns and things that just form after the fact, after the market has already basically made that move. But I'm not saying you can't be successful with those price action strategies. That you can, right? There are plenty of examples of really good price action traders, right? I'm not knocking anyone. There's no one better thing, right? It's whatever works for you. But regardless, if you understand the market auction and you understand order flow and volume and all those things, it's going to start adding so much more precision to take better entries with very high risk versus reward, and to avoid conditions like when conditions change, avoid bad setups that cause you to just blow up all the capital that you made when the market conditions were aligned with that, what works well for that setup, right? So staying very in tune with the real-time auction helps you adjust quickly when conditions change, so you don't, go from making money to blowing up when the conditions change. And it helps. So it helps you with greater precision and just essentially avoiding, bad setups when conditions change. So from a pure price action structure, things that I look for is just, as I do analysis every day, right? I'm looking, people have different ways of doing it, but I'm looking at supply and demand areas, support and resistance areas, where the market is either imbalanced or imbalanced, trending up or trending down, right? Now, the next layer of information, I'll drop this screenshot in here in the Discord before I move on. The next layer of information that I like to add that is a huge benefit is volume profiles, right? That's like the simplest, easiest thing that you can add to start incorporating volume and order flow into your trading analysis. This is a little bit more difficult for those of you that just trade Forex because the exchanges are not centralized. So the concepts still apply, but it's, best used on like the stocks and futures, et cetera, that trade under centralized exchanges. But looking at a volume profile, say we have the same balanced market condition that I was talking about, right? So just a candle chart, like within a range, right? And it may not look as perfect as this, right? But I'm giving you just an example, and then we'll go into real world examples here as we go on. But looking at a volume profile, when you see conditions like this, you'll typically see more of a bell curve of volume built, right? And so this helps you see not just a consolidation range on a candle chart, but it helps you see exactly where like the bulk of volume is being transacted, right? Because in the, call this like maybe the point of control, something where the bulk of the volume is being transacted is where price is most agreed on, right? So if buyers and sellers are agreeing on price in a range, we have a balanced range market. Yeah, turn the music down a bit. If buyers and sellers are agreeing on price and we have a balanced range market, we can quickly identify that on a candle chart, but then we want to add some more precision. We can look at the volume profile to see, okay, like where is the most volume being transacted? Because oftentimes if we try to, pop outside of that area where most volume is being transacted, it's not always perfect like this, right? But we'll see little pops out of there. And if it gets outside of, where most of that volume is being transacted, it's very often going, to first start failing and reverting back towards where the bulk of the volume is transacted, right? Because it's a balanced market. Now, the other condition, so this is balanced. The other condition that I talked about when the market is imbalanced, we'll look at a volume profile. We'll start to have more of a wavy volume profile, right? And so when we're in a trending market, actually, let me draw this a little differently so I can. So when the market is trending up or down, we'll have rallies and we'll have basing in the short terms in periods where volume builds, and then we'll rally and base, rally, base. Because if the market is trending, we'll often like build these short-term areas of balance like this. And if there is still truly an imbalance going on, right, price is accepted by these buyers and we continue moving higher because they're like, no, it's still a good deal. We still want to continue buying, right? So we'll have these periods where volume kind of builds and you have these peaks and valleys. I call it just like a wavy volume profile pattern, right? And so what happens here is we build these areas where volume consolidates and price moves aggressively out of it because the condition is imbalanced, and it will leave these areas of lower volume, which we can see from price action. People will often call this like a fair value gap, right? Or the new buzzword that you see a lot of people referencing is like a low volume node. And so, but the problem with just like a fair value gap concept alone is like it doesn't necessarily show you, not every fair value gap is respected or high probability even, right? So understanding where the volume is built and then where price moves aggressively out of it after, with a substantial amount of volume, and leaves an area of lower volume overall on the volume profile, because price, if there's such an imbalance between aggressive buyers versus sellers, then price will not spend a long period of time there. And that is what creates like a fair value gap. But the problem is, depending on what time frame you're looking at, it can be different. And without understanding when and where volume is transacted, you're just kind of throwing a dart in the dark, right? You don't really understand or know, you're just kind of taking a guess. And right, sometimes a blind squirrel finds a nut, but if you want to add a significant layer of precision to that on top of your fair value gap or whatever it is that you're looking at, then you can add the volume profiles both on a full daily range and intraday to understand, where we build volume and where we rally out of it aggressively when conditions are trending and we're having an imbalanced market condition. Does that make sense so far? Any questions in the chat? And I'll pause here for a bit. And the exact same thing applies to the downside, right? So if we're trending lower, we're building some volume here, we're dropping, building some volume here, dropping. Same thing applies. Now, the behavior of bear markets versus bull markets is a little different, and that takes time and experience to identify, but the concept's the same. Is your strategy similar to Carmine? Yeah, Carmine is a fantastic trader, and I traded with his group for a long time, still a member there. He's another great order flow trader to learn from. Yeah, you can add more help. You can do more with price action alone by adding multiple different time frames that you look at. That is true, but it's you're still just trying to finesse your way out of just identifying what's really going on in the market, which is where price and volume transacts. All right, so let me drop this in the Discord here. Okay. So the next thing that I'm going to kind of narrow down into is kind of talking about the actual participants that are here in the auction. What volume profile should we use, the overnight session or London? So that's a great question. I typically use the full daily volume profile for like my daily analysis. And then we'll get into a specific trade example of how I use it intraday. I also will look at like an intraday volume profile on my DOM. and areas where, you know, higher and lower volume forms just intraday, and that's morely for specific entry confirmations on trades. Welcome from India, man. So we'll dive into another layer here. So I'm going to take a screenshot here of my actual footprint chart, right? This is live right now. Again, I'm not trading, but I have it up to show you guys. So we'll talk briefly here about the different types of participants that are in the market, right? So essentially we have aggressive participants and we have passive participants, right? So we have aggressive participants and we have passive participants. Sorry, this drawing is not super great, guys. I'm doing my best with a mouse. All right, so when we're analyzing the order flow, right, on top of understanding things inside, you know, the overall structure of the market and volume where it's built throughout the daily range, when we're actually looking at the real-time order flow as it comes in, we need to understand the relationship between aggressive participants and passive participants, right? So aggressive participants are trading at the bid, at the ask. They're getting in right now, and you'll not be guaranteed a fill at a specific tick price, right? And so if you've been trading for a while, you understand this as a market order, right? So if you're putting in a market order, you're an aggressive participant. You're getting in right now at the bid, at the ask, but you're not going to get guaranteed a fill at a specific like tick price. Okay. The other participants are passive participants, and they are putting in limit orders, right? So they will passively buy, right, by setting the order, and it will guarantee they only get filled at the specific price when price trades there and when it is hit by a market order, right? So a completed transaction is going to be a limit order and a market order, right? So there's never more one side or the other per se, right? So every one completed transaction needs one buyer and one seller, right? You can't, if you're a buyer, you can't just buy from thin air, right? You have to buy from someone. So in order for you to buy from someone, someone has to sell. But a pairing of a limit and a market order completes a transaction, right? So we need to understand the relationship between them as we're watching the order flow, especially when we're watching it around like key areas of support and resistance, supply and demand. Combine that with the understanding of, you know, the volume profiles and all that stuff to add structure, right? So the reason I like my footprint chart here is because I can see the exact completed transactions. Again, this is on the S&P futures ES, but the same concept applies to anything, right? And so what I'm looking at here is 5-point range bars. This is not time-based, right? So it opens up a new bar for each 5-point range. So the time is not necessarily consistent down here because it's only opening up a new bar when, you know, price moves outside of that previous range. Does that make sense to you guys? So that gives me a good feel of the pace of the market as it's moved by aggressive participants. And it also gives me an exact breakdown here. So on this bar, I see the total volume, right? So like the volume profile on the right-hand side and the delta between aggressive buyers and sellers on the left-hand side. So in a micro example here, just looking at this bar, right? At the bottom here, we can see there was 5 total transactions. The total volume here was 5 at this tick price. And there was 5 aggressive sellers here, right? So there was, do this. So there was 5 aggressive sellers and the total volume was 5, right? So what does that tell us? if there was the total volume was 5 and there was 5 aggressive sellers, then we know there was 5 aggressive sellers here, but that had to be matched with 5 passive buyers, right? So in this micro example, right, we're uptrending, and on this pullback, we pulled back as far as there was aggressive sellers, right? So the market moved down here until there was no one left aggressively selling that could overtake as many orders as there was passively sitting there to buy, right? So this is like a very micro example of absorption, right? So we pulled back here as far as there was, aggressive sellers overtaking passive limit buyers until we hit this point and, sellers ran out of gas, I guess you could say. There was no one left selling aggressively, and there was still enough passive buyers there that all 5 of them were bought, and no one is left to sell. So once more aggressive buyers come in, price easily shoots back higher, right? Because anybody that sold down here either has a stop order to buy back the position as we reverse, or just aggressive buyers come back in, and everyone that was willing to sell aggressively has sold. Now there's just limit sell orders here, and aggressive buyers step in, and we easily move back up through them. Does that make sense so far? So like people talk about absorption, but this is like a micro example. Like on a pullback, we saw 5 aggressive sellers were absorbed by 5 passive buyers. There was no one left selling aggressively. So once aggressive buyers step in, then price moves back the other way. It's like a real-time game of tug of war between buyers and sellers that we're watching in real time. You want to be pairing this with understanding the overall direction, right? You don't want to misinterpret like, buyers give back a step, right? But overall, sellers are winning the war, or vice versa, right? You want to understand if this is occurring just on a pullback within a bigger trend, or if this is a true reversal at a key point. This footprint chart is Sierra chart. I also have an almost identical configuration for Tradevate, which you can use with both your personal and prop firm Tradevate accounts. And if you're interested in setting that up, I have videos on YouTube showing how to set that up. And same thing for the volume profiles that I'll show. I have videos how to configure that on Tradevate as well. Give me a second to get some iced latte here, guys. Hopefully this all makes sense so far. I'm trying to break it down as simply as possible, and we get more and more narrow, more and more technical with the information. Let me drop this in the Discord before I forget. Okay. So in this example, we're seeing like on this pullback, like kind of a micro example of absorption. And this is a kind of a key concept that I use in a lot of my trades and setups, is just the understanding of liquidity and absorption. So I want to give you guys like a little bit of an example. So you see like a real technical example, but and maybe I should have started with this, but I want to give you guys kind of a way that I explain this to people to understand absorption. Okay. So imagine the example of a faucet and a sponge, right? So a faucet is, say, like dripping orders, right? These are market orders, right? So imagine like a dripping faucet is dripping market orders, okay? And passive participants are like a sponge being held under that, right? Sorry for the crudeness of these drawings, but imagine like a sponge, right? So these market orders are being matched with limit orders. The limit orders are like a sponge being held under a faucet, okay? And so if, you know, say these are selling orders dripping, right? The market's selling back, and say this is, we'll say this is, you know, call it like a prior demand zone, right? And we're now looking at absorption occurring from passive participants here like a sponge. So the market is selling here, and the passive participants are absorbing this pullback, okay? So when I'm analyzing the order flow in real time, I'm analyzing this to see like, are passive participants large in size here, and are all the sellers that's selling into the zone being absorbed, and now we're likely to reverse out of here, right? Because once the last seller has sold and they've all been absorbed, right? It's like this faucet just got shut off, right? All this selling orders are gone. No one is left to sell, and now is the faucet is shut off. And, you know, as soon as aggressive buying comes in, it's got very little resistance to continue moving up. Does that make sense? However, that's not always the case. It's not always the case of we just see absorption and, you know, we just take the reversal with absorption, right? It's not quite that simple. So it comes with a little bit of discretion and understanding how to read the participants as they come into the market with size, right? But it could be that, you know, we drop into this level, right? And, you know, it's being absorbed, but the absorption has been going on for a while, and these drips become heavier and heavier, and the sponge is getting saturated, right? More and more people are wanting to sell. And then, you know, this faucet is now like starting to become a fire hydrant, right? And this faucet is becoming a fire hydrant and now just like gushing sell orders, right? And so that absorption is now totally saturated and just breaking through that level, right? So this helps us in real time. Seeing the order flow is what helps me see with great precision, like, okay, is there strong enough passive participants here that this is a good opportunity for a bottom reversal on this pullback? Or, oh no, selling is coming in heavy, it's completely strong enough, and now we're looking for like a break and retest under this, right? Because now the absorption has just become totally saturated, and, you know, heavier size volume is coming in on the seller side, saturating this, and now this is an opportunity for a break and retest under this. But with looking at a candle chart alone, you don't really know, and you're kind of like just kind of waiting and kind of see a reaction after the fact, right? And then you know, you can still catch it possibly after the fact, but your risk versus reward is going to be skewed, right? Because you're waiting for candle closures, you're waiting for a bounce to occur and a pullback, which is valid. I still look for that on order flow, but I'm just able to do it a lot faster with a lot higher precision, right? Versus buying up here and putting a stop down here. I'm able to identify it like here as it's happening with a stop like here. Does this simple example kind of help you understand absorption and order flow around, you know, support and resistance, supply and demand? I promise we're going to get more and more like real world examples here, and I'm going to show you an exact trade setup that I took, and it will hopefully click more and more for you guys, like seeing it in a real world example. All right, let me move this now. All right, again, so if you want to review that screenshot, I'm dropping that in the ChartFanatics Discord. All right, so I'm going to go back here to November 25th, a couple days ago, and show you what my game plan was for this, like based on seeing the market structure, the volume profile. And then I'm also going to show you like the exact trade that I took, the exact confirmations that I saw, and how you can, hopefully use it for yourself to gain precision in your own trades. Or at least just have a better understanding of what's going on in the market, right? So this is my 30-minute chart with a volume profile. I have the same thing on Sierra Chart and TradeV. Again, if you want a configuration similar to this, check out the video on YouTube that I have going over setting up volume profile. But this is what I was talking about, earlier in the stream, the wavy volume profiles on an uptrend, on a trending imbalanced market, right? But going into this trading day, so like imagine, we don't see, obviously we see it now, but imagine we don't see, this, we don't see this part of the chart to the right, going into the trading day here, right? So all we see going into this trading day is we've been on this uptrend, we've been making the wavier volume profile, but going into this morning, the 25th, we had built all this volume up here at the highs, and really since like noon this day prior, we were in this balance range, right? So we kind of transitioned in the short term from being on this uptrend to now we built volume here all afternoon in this consolidation range. And then overnight, we continued that same buildup of volume in that consolidation range. So going into the trading day, again, like I talked about, when I see the bell curve of volume built up, now kind of from the prior day afternoon, overnight, continuing into that, the first thing that I start to look for in balance range conditions, right, is mean reversions. Because if buyers and sellers are generally agreeing on price, right, we're in this balance range, I'm looking for any like extremes where we get slightly outside of that balance range where I can look to just fade the market and then just target that mean reversion, right? So if this is the mean where buyers and sellers are agreeing by price, I'm looking for failed attempts from participants to get out of there, to fade it and just use, that as an entry opportunity to take it, from here to here to catch that high probability piece as we revert back to the mean. You could say that's like VWAP or point of control, something of that nature. Now, eventually, markets don't stay in balanced conditions forever, right? This will transition to being a wavier profile again. If and when we do finally break out of there. And so, but the first thing I'm looking for is mean reversions until we do truly break out of there, and then ideally retest. And then that comes to like what I do on wavier volume pattern conditions, right? When we're trending in a direction, then I'm looking for, a break of that pullback and hold from larger participants defending it in a fair value gap, in a low volume node, etc. But the example of this trading setup on this day, on the 25th, was, okay, going into this trading day, we had started to establish balance conditions, although on the week we are trending higher, right? So buyers have kind of taken control. So the best probability thing for me to look for in that is just any failed dips at the lows of that consolidation range to look for opportunities to go long and just target a mean reversion, right? And then if and when that does break out, then obviously we can then look for, the retest and continuation outside of that. Yeah, so do you want to see absorption at the edge for the mean reversion? Yeah, there's definitely absorption confirmations that I look for, and I'm going to give you guys this real world trade example and the exact confirmations that I saw to take the trade. right? So we're getting more and more specific and narrow in the down to like from the overall context to volume profiles, understanding absorption to like the specific trade confirmations that I used for this trade. And this is a setup that I repeat often. So it's not a one-time trade. All right, so I will drop this. So on this day, right, after we open, again, so ignore the yellow box, right? Say we don't have that information. This was my game plan, looking at how this volume had built up in this range pretty much since the prior day at like noon, right? So that's a substantial amount of time that's now built in this consolidation range. So first, my game plan is to look for dips to go long and just target the mean reversion back to the middle. Okay, so I'll show you, here's my TradeZella for this recap. Again, shout out to TradeZella. It's the best tool in the business for analyzing your trades and tracking your data. But on this example, right, I made $1,100 and I was risking about $250 and I was just trading it for a mean reversion, right? So again, this is a 1 minute chart. So you can see when I took this trade, right, this candle was not a big green candle like this. This looked like a solid red candle like this, right? And I got in the trade there, just targeting a mean reversion back up into here. But we had this volume profile going on, right? That was kind of the analysis for that setup, right? To be looking for this. Now I didn't catch it on this first dip, and I'll show you guys why, right? But I waited, then saw the pullback, saw the opportunity at a key spot, and I'll show you exactly where and why I took that at that key spot to go along with it with a like minuscule stop. All right, so you guys know the game plan based on seeing that volume profile going into this day. So on this sell-off, I was looking at areas to get long, right? And so when I was looking at that volume profile, I was looking at a couple key spots from the day prior, right? So again, going back to this screenshot here, we had this volume built up in this range. And so look to the day prior volume, right? See that there? See that there? So those were areas that I was looking for buyers to step in, where they were very aggressive and broke, prior highs. And when they broke prior highs, buyers were so aggressive that they left low volume nodes on the prior day, right? So do you see exactly where that occurred on this dip? No coincidence, right? That's where aggressive buyers were. Drop that in the chat. So those were the where I was looking on the pullback, okay? So then on the pullback, I was not able to catch this on this first dip here, right? Because you can see from the TradeZella screenshot that I just shared, was looking, I think I got in at 10:05 over here, right? Or just after. So, but, I missed this because we dropped down here and I saw this large absorption occur, right? However, I didn't really see, a good confirmation to long it, right? I don't just look for large absorption on a pullback and just immediately get long, right? That's a good way to just eat a lot of stop losses. I need to see the auction start to flip the other direction and give me a little opportunity to get in with that momentum as it flips. But I'm not trying to just bottom tick the absolute bottom when I see large absorption, right? Because that can occur several times where you can get swept out, right? So you could eat a lot of small losses doing that. So on this dip down, I identified these areas that I marked with a green box where I was like, okay, large absorption occurred here. And then price shot back out of there once the last sellers had sold, right? And then aggressive participants stepped in, price shot back out of there and reclaimed back above these areas. And these aligned with those low volume node areas from the day prior. So I missed that because I was looking for a little pullback into it to get long, and we just didn't really get it. It just shot out of there and never came back, right? And if that happens and we just continue on, you know, okay, I missed that one. There'll be another one tomorrow and the next day, right? So I sat out there, but I marked these spots. I was like, and you can see on the heat map here on Bookmap, these are where passive participants are, right? So the darker the spot on the heat map is where large passive participants are, right? So they absorbed all these sellers and then we reversed from there. But I looked specifically at these spots where that really large absorption occurred, because now my game plan is, okay, if we pull back to that spot where that really large absorption occurred, and then we reversed from there and trapped. So we trapped all of those sellers, right? So anybody that was a seller down here that sold into the lows got trapped. They got squeezed on the reversal, right? I'm now looking if we retest that spot for more absorption and aggressive buyers to step in and defend it. And if they do, it'll be an opportunity for me to go long. And then again, according to the game plan, based on the conditions that the market were in at that time, just target a mean reversion back towards VWAP here. That's it, right? That's all I need to do. And so, you know, we got the pullback into this area. And now on the pullback into this area, this is what I saw. So see again on the heat map, right? So these are passive buyers here on this dark spot. And where is that? Exactly in that green box that I had marked from before. And so we pulled back into there. We saw all of these sellers again try to break this. Remember the example of the faucet and the sponge, right? So that faucet dripped into here, all that sponge absorbed all of them, and then that faucet started to shut off, right? Aggressive buying stepped in and started moving price, and then see how the selling was lesser, right? And we pulled back again, and look at the heat map. Passive buyers stepped in again here. See the dark spot on the heat map? So we tried to pull back into this zone again, and sellers again failed. So at this point, I'm like, all right, sellers are out of gas. So the second I see aggressive buying stepping in, I'm going long with them, right? So right here at 92.50, I go long right at the start of this reversal with a stop only here under 90. So I'm risking like 2.5 points. And even on just a quick mean reversion, right? That trade took 2 minutes back up here, is 4.5R. So let me go back to TradeZella to show you. So this is Bookmap. If you're late, this recording is going to be shared on here, so you can easily go back and review it. So again, just going back to TradeZella here, right? This was that first dip where I spotted those key spots of large absorption, right? So then I'm waiting for a retest to see if I see the good confirmations. And again, I was just targeting like that mean reversion back into that range, 6,700 plus, right? But doing that, you know, I realized 4.6R, even on just a very small, mean reversion scalp. So the confirmation was, I was bringing up that screenshot to show you where I got in and why, which was, you know, I got filled at 92.5 and stopping just under 90. And the reason for that was because, again, it was that key zone that I talked about, low volume node day prior. We saw large absorption occur there. Then on the retest, we saw passive buyers defend it, then aggressive buyers stepping in. Then on the pullback, more passive buyers defending it. So it's like the sponge is growing bigger here and the faucet is dripping less and less, right? So as soon as I see that pivot start to happen and these aggressive buyers step in, I immediately just go long with them here at 92.5, stopping just under 90, right? So 2.5 points of risk. And you're going to see what happens there. Once that imbalance has started, right? We went from absorbing all of them and that flip is starting to occur. Boom, shot straight back up into that mean reversion condition, right? Now, Obviously, what happened later in the day is, we broke out from there. And if you go back and look at the day, we ended up trending higher from there. But the highest probability piece for me, until that condition changed, was just from, my entry to the mean reversion, right? So I just go in and out there, right? So from here, just back to here, right? So if you want to draw like the risk versus reward box that people have, like that is my reward box, and my risk box is like that. It's like almost zero. And so then, later in the day, right? Remember that balance range? Then we broke out of there with aggressive buying and continued to absorb. So then that kind of transitioned to that next setup that I talk about. Okay, now we've broken out of the balance range and it's being defended on pullbacks. And now, that could be a follow-on trade, which would be the trending move. Now you could catch this here and you could hold a runner and maybe hope for the breakout. That's all good if you have a systematic way of doing it. But again, the high probability piece, once we've established like the balance range that we're trading, is just there to there. Does that make sense as far as the game plan, the confirmations, reasoning going into the trade, everything? So my execution is super fast, and I typically get in with bracket orders that automatically pace my stop and take profit, and then I can just quickly adjust that on the chart, right? So it automatically enters me with like a 5-point stop, and then I just can quickly drag that up to like the 2 points where I wanted my stop. Or the other way I do it is just entering directly off a DOM, like you see over here on the right-hand side of my book map. You can just use a DOM to, set a buy order, set a stop order in very, very quick milliseconds, right? We do have the giveaways upcoming, guys, so stay tuned for that. Hopefully this kind of overview of, supply and demand, market auction, understanding volume profiles, understanding the market auction in real time through the order flow, and then how to like tactically use that in a real world example for an actual trade setup. Hopefully that helps you and makes sense for you guys. Let me know if you guys have any questions. If you haven't already, if you appreciate this much free value, please drop a like. It helps us out a ton here on the channel. And, we're here on a holiday to give you guys some super valuable information. Yeah, it takes time and experience. It does take time and experience. If you guys don't already follow me on Instagram, I highly recommend checking that out. And today only, if you guys DM me the word order flow, I will send you a private webinar that I did for free, breaking down this setup again. And so if you do send me that on there, I will send you the link to the private recording for that. So we do have some giveaways coming up, guys. So we'll run through those as well. But first, before we get into it, I want to see if you guys have any other questions about order flow, about the analysis that I covered, about this specific trade setup. This is just one setup that I trade, right? Mean reversion. It's a good one. You could make a living just on this setup alone, but there's lots of different setups that you can use. And if you already have a good price action strategy, even just taking this understanding of the auction and order flow can add just a huge layer of precision to help you take better trades and maybe get a little bit more precise entries on your price action strategy, and just avoid times when it wouldn't be good to trade that, just by understanding what's happening in the auction. So as you're earlier on, it is good to probably play smaller size, wider stops. You could put a stop all the way under this box that I drew here. Somebody asked, why wouldn't you just that? For me, the stop loss goes at the point that invalidates the trade. So based on what I was seeing right here at this point was a good confirmation for me to get in the trade. And it's one of those scenarios where I say, I'm like, it's right now or I'm right out, right? So as soon as we break over this little structure, I trailed my stop to break even too, because if this sweeps me out, I would rather just get out here for like a point, get out for break even, get out for a point, get out for 2 points. And then if I see good confirmations, I'll get right back in the trade if we pull back here. But I'd rather not, just eat a 5-6 point stop loss for no reason. When I see confirmations, like I have confirmations here to take the trade, I've seen this large absorption occur twice now. Now the tape is flipping and aggressive buyers are coming in and I'm going with them. So I don't need a wide stop because, based on the analysis that I'm seeing here in real time, if we drop below this, then, there's a good probability if this absorption fails, right, and we saturate through it, it's a high probability chance we're going to sweep through this. So I don't need that stop loss to be down there because I was just looking for this type of pattern to occur in somewhere in this zone, and I saw it occur here right at the top of it. And so based on this entry, based on seeing what I saw to confirm the trade, in the short term, it would be invalid for me. So if we get below 90, right? So I'm going stop loss right there at 90. And if we sleep below it and I reconfirm it, I have no problem getting back in it. That's the beauty of having like really small stops rather than just holding a big stop. No, I don't pay too much attention to cumulative volume delta like on the whole day. A little bit, but not too much. Yeah, so you could see the same information on like a footprint chart on Tradeovate and stuff. So you could pull that up and see it. I don't have it pulled up from prior day ready to go here, but I would say look at this time frame so you guys see when it happened, right? Pull up your footprint chart and go back and back test it for yourself and see what you see. It's the same information, right? The only disadvantage is on a footprint chart alone, I don't have the heat map to see like where the passive participants are popping in. So you could have to look at that like on a DOM to see the level 2 or something. Bookmap is like a cheat code because I can see the aggressive participants quickly with the bubbles. I can see the heat map where the passive participants are stepping in. So it's just a super fast visualization. So I don't have to like see the numbers and try to like mentally compute it and stuff like that. I just, bam, I can see it visually so fast. All right, guys. So we are going to run the giveaway. We do have some giveaways to do here. Enter this in the chat one time. If you spam the chat with it, you won't be selected for the input. So one time, if you guys drop in the chat !join, then you will get entered into this. We're going to run the giveaways now. We got several funded accounts, or not funded, prop accounts to give away. !join in the chat. One time in the chat, guys. We have Apex accounts, we have Funded Next accounts, we have Alpha Capital accounts. Oh, sorry. I may have jumped the gun, guys. Okay, sorry. All right, so we're gonna run this again, right? The team on the back end wasn't ready. That's my fault, guys. All right, new word. Forget !join. Psych. Black Friday trick. All right, order flow in the chat. Do !order flow in the chat one time. Yes, you can type this again, but only exclamation point order flow in the chat one time to enter for the giveaways. We have 3 accounts. We have Apex, Fanatics, and Alpha Capital. That's my fault, guys. I jumped the gun. I didn't check with the team on the back end, right? I was so eager to give you guys stuff for free that I just went full send. That's my bad. Exclamation point order flow in the chat one time. And we're going to close it here in just a minute. And we will do the giveaway, which I'll throw on screen here. All right, guys. We're going to close it now. So exclamation point order flow. We're going to close it. We're going to drop the names in. Give me a second to get the names for the drawings. Like I said, we got 3 accounts: Apex, Funded Next, Alpha Capital. All right, guys, so it is now closed. It is now closed, so don't enter it in the chat anymore. But hey, great news. If you missed it, there's more every day, right? We got the live streams going every day in ChartFanatics for you guys. All right. All right, so I've got the names in, guys. Let's go. Simone. I'm not going to mispronounce that. 4253. Are you in the chat? Our first winner. Let me know in the chat if you're here. So guys, to claim this, you need to go to the ChartFanatics Discord. Again, free to join if you're not already in there. Go to the giveaway section and follow the instructions there. There she is, or he. Simone. There you go. All right, let's run it again. Mohammed 6684. Congratulations. Let me know in the chat if you got it. Again, if you didn't get this one, guys, we're back with more like every day. So we got one more giveaway coming up still too. Mohammed, are you in here? There he is. 6684. There you go. Follow the instructions from the chat there. Let's run it. There we go. 3999. G. Hisa Chowley. Congratulations. Again, if you didn't win today, guys, like I said, there's more every day. Let me know in the chat if you got this. 3999. Congrats. hopefully you guys got a lot of value out of the analysis today and learned something at least to improve your trading going forward. I do recommend being very cautious on trading days like this, you know, before a weekend and between a holiday, short trading day. Reminder, the market closes early today, I think at 1 p.m. Eastern. So be very aware of that. Be cautious, protect yourself. Don't blow up capital in very choppy conditions. How to align heat map bubbles with delta footprint for entries. Somebody asked. Good question. Honestly, my best recommendation is just start watching it for yourself. Go back and watch key reversal points in the market and just do that again and again, back test it, forward test it, and start to see the patterns for yourself that form when reversals occur. Take screenshots of it, annotate it. That would be my best recommendation, and align the different confirmations that you see. So congrats to our 3 winners today, guys. Hope you guys have a great weekend, and thank you for tuning into the stream today. I am going to wrap it up here. Again, if you have any questions, feel free to DM me on Instagram. If you are interested in the footprint charts and the volume profile stuff that I showed you guys today, I have videos on YouTube showing you how to set that up on Tradeovate. It's a super good platform. I have no relationship with them. I have nothing. I'm not promoting anything, but if you use that, I know a lot of people do with both prop firms and personal accounts. So I have free videos on just how to set it up. I don't have anything else to respend, guys. Those are the 3 accounts that I have, but we will do more. So stay tuned for next week. Thank you guys so much for tuning in. Hope you guys got a lot of value out of this today. And I will see you guys next Friday myself. Friday's live stream on ChartFanatics is my time for here, but lots of other great traders all week. So, and lots of giveaways all week. So highly recommend tuning in for that. So thank you guys. And I will see you back here next week. Peace.